Well, Bitcoin has been on a tear in 2025, up nearly 15% and notching all-time highs. But comparatively, altcoins, they have lagged, with the market vector Digital Asset 100 small cap index showing over $300 billion of market value wiped out. For more, I want to bring in Noelle Acheson, who is the author of Crypto is Macro Now, Substack. Great to have you here with us. So first, just take us into your assessment of why altcoins are seeing this move while Bitcoin is notching new record highs over the course of the year.
To be with you, Brad. Thanks for having me. It's still Bitcoin's market. That's the simple answer. And what I mean by that is we're still early in the cycle. Generally, in the various crypto cycles, you have the concentration of activity in Bitcoin to start with because it's the relatively safe on-ramp, and relatively is doing a lot of lifting here, I know. It's the relatively safe on-ramp. It's the most liquid. It's the oldest. It's the most tested. It's the most widely held, et cetera, et cetera. Then, when investors get more comfortable with the risk, they go further out on the risk curve, and that's when we start to see altcoins outperform. We're not there yet. The focus is still on the macro story, that's a Bitcoin play, and on the store of value story, that's also a Bitcoin play.
And so as we're thinking through what needs to happen for Bitcoin in order for us to look at the momentum that we've already seen in terms of the movement in Washington, D.C., and then additionally in some of the corporate ranks who are cozying up to crypto or digital currencies, even more so, how does Bitcoin capitalize further on this and hit some of the astronomical targets that have been set by those who are most bullish on the currency?
Well, strangely enough, some of those astronomical targets actually have been hit, much to many of our surprise. Bitcoin is not really affected by the same story that is driving Circle's share price, for instance. Bitcoin is a longer-term play, and it started when the ETFs were approved over a year ago. It started with the education and the institutional adoption, not just in the US, but around the world. Then again, there is a different story, which you were just talking about, which is stablecoins, very different driver there. They benefit from overall activity, not just the narratives driving some of the marketplace, such as Bitcoin at the moment. Very different stories, very different things going on. The Genius stablecoin bill, which looks like it's going to pass sometime soon, that's an overall ecosystem boost rather than affecting directly Bitcoin.
So what is more significant? The fact that you have central banks around the world that are starting to mull over the reality of a central bank issued digital currency or stablecoin versus some of the private companies and banking institutions like a JPMorgan that are trying to figure out ways to offer this to their clients and even some of the card transaction processors as well. I think I saw some news from Mastercard recently on the same effort.
I love that you asked that question, Brad, because it gets to what I think is the most interesting story behind stablecoins, be they the CBDCs, be they the stablecoin acts that are being passed, again, not just in the US, but in many other jurisdictions as well. And that is a redefinition of what we understand money to be. Money traditionally has been issued by, or issued and guaranteed ultimately by central banks. It is a fairly stable value. Stablecoins, although they have stable in the name, they're not quite that. They're private money and they're not always stable in value. And yet, we are treating them as money. We are looking at a new type of money emerging into the market, which is why you're seeing such interest from the traditional guardians of the financial order.
And so what does that mean for the other legacy cryptocurrencies, Bitcoin, Ethereum, and potentially, even some of the majors that have been able to attract fanfare on the coattails of Bitcoin and Ethereum that have really been looked at as and transitioned now from utilization and that thought process to now just store of value?
The easy answer is they're not really related, but they actually are related. If you lift the hood, you'll see that most stablecoin activity is used in the settlement of crypto trading. That's its number one use at the moment. And the more stablecoins that are sloshing around the system, the easier it is going to be for many of the traditional players to efficiently trade crypto. Now, it's not necessary. There are many fiat on and off ramps these days, but stablecoins are a better settlement instrument for crypto trading. So the more stablecoins, the more acceptance, the more liquidity in crypto markets, which should, all else being equal, have an impact on price. But the underlying narratives, again, are very different. Bitcoin is a macro asset, very risk sensitive. It is also a store of value longer term. ETH has a whole different set of narratives going on, so does Sol. But stable coins are, if you like, the plumbing. That's probably a very hand-wavy word, but they are what makes the crypto ecosystem run, while at the same time redefining payments, banks, redefining traditional settlement, and redefining bank services.
Noelle, thanks so much for taking the time here with us today. Really appreciate it.
Great to be with you.